Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 5th. I'm Eric Wilkinson. Yes, you may recognize me as the Wolfman on mainstream media, but what I'm here to teach you is how to implement options into your portfolio. Anybody can teach you how to build a strategy, but nobody out there is really teaching you how to implement that strategy and what goes into that. That's what I'm here for. But without further ado, I gotta say, past performance of any trading system or methodology is not necessarily indicative of future results. All right, on with economic data. Across the pond, not a whole lot to see there. A couple of bond auctions. Still seeing some negative rates over there, especially in France. But here in the United States, we got ADP, non-farm payroll employment change. It came in with 195,000 hires, expected to be 148. Last month's number did get revised down by about maybe 17,000, I think, something like that, but not enough to like make a dent in this headline number, which was actually really good. It was actually 14,000 revision down for last month to 142 from 156. But we got this one coming in much higher, 195 versus 148. That is good. It's a precursor to tomorrow's economic data point, which is going to come in the form of non-farm payrolls, the unenjoyment number, which is what we used to call it on the floor. That is the major number for the month. But this gives us a pretty good idea as to that. ADP in the past used to be kind of like maybe the ugly stepchild, for lack of a better analogy, that it wasn't always quite that poignant. It's becoming a lot better economic data point ahead of that non-farm payroll. All right, so then we also got unemployment claims coming in at 217,000, expected to be 215, so that's right in line with what was expected. Again, we're seeing people get employed, looking for jobs and finding employment. You know, some of those people that were out of the job force, not claiming unemployment, they don't become the statistics. Those people have been coming back into the realm of looking for a job and finding those jobs now. But then we talk about final services PMI coming in at 50. We also have Institute for Supply Management coming out a little bit later. We haven't seen that data point come out yet. Let me just double check on it. Actually, here we go. We got non-farm payrolls coming in at 56.4, expected to be 54. Remember, anything above 50 on this economic data point is expansion. This is non-manufacturing, so it's more of the service sector. It's not one of the more important economic data, or it's not a great gauge for expansion. We'd like to see that really happen in the manufacturing sector. We got factory orders coming in at 1.4%, expected to be 1%. So again, we're seeing some good numbers out of that. Natural gas storage is coming in at 80 billion cubic feet. That's a build greater than what was expected. It was supposed to be at around 77 billion cubic feet. So storage is increasing there. Crude oil inventories, drawdown of 4.8 million barrels, expected to be a drawdown of 2.4 million barrels. That's driving crude oil higher here today, as you can see. Good economic data points coming out today as well should give people the expectation of the economy doing well and driving demand towards crude oil. And that's about it for the economic data coming out today. Let's move on to the overall markets. We've talked about this. Crude oil moving higher. Again, we'll start finding resistance above the closer we get to that 60. We got two resistance areas at 58 and at 59. 60 could play into that as well because it's a psychological number, and those numbers have a tendency to come to fruition as well. And then we move over to gold. It's having a terrible day, down $32. You know, we were looking at we were looking at gold, maybe even breaching that 1600 mark. Yesterday's market action made it look very toppy. Today you have confirmation to the downside, so it might be time to start adding some short deltas in the gold futures, or you could use GLD. You can even go to GDXJ, which is the gold miners. Any of those will start working. Usually the gold miners, GDX, GDXJ, will have a lag to what we see in gold. So if you like to trade the lagging aspects of this, then that's what you're going to be, or of gold, then that's what you're going to be looking at. And then onto the bonds, they're coming off as well today as we're seeing the equities move higher. Again, talking about the economic data, that's pushing equities higher. That may start leading to the fact that the Fed doesn't need to lower interest rates, all right? Now, we've talked about yesterday, Bullard was saying that maybe a 50 basis point cut followed by 50 basis point cut in the Fed fund futures, or Fed fund rate, actually, which is correlated to the Fed fund futures. But he is saying that, you know, the futures were leading the way is what I'm trying to get to there. And maybe today he's talking about taking that 50 basis point cut and maybe cutting it at half, leading us all to maybe the future should decide really where the interest rate is. For those guys that were on the floor anyway. All right, VIX coming off again. That is expected because we're seeing the Dow spike higher here by about 450 points. The E-mini S&Ps are higher, as well as the NASDAQ. We've broken above this 78 Fibonacci area. That's been acting as a strong resistance, and it coincides with the 50-day moving average. But we're blasting up and maybe getting ready to get above the value area high. Now, that's going to be an important settlement today. If we get above that value area high, it could mean that the shorts are going to be on their heels and looking to cover. So that could really push us even higher, with maybe even all-time highs coming up very soon. I was expecting us maybe to roll over a little bit here for the next few days, maybe even a week ahead, especially ahead of the non-farm payrolls number, but I think that ADP number is really trumping everything right now. And then we've got the E-mini S&Ps moving higher, again moving above its resistance area that has been lock, stock, and barrel solid. Now we're above that. Settlement, again, lining up with the value area high. If we settle above that, that could very well mean that we are going to be testing those all-time highs. Now we look at the overnight trade for E-mini S&Ps. This is a 30-minute candle chart. The gray section is overnight. You can see pretty much long coming into the day. Now we would like to see a lot of times that we can get flushed out, but when we see that move higher even after the day session, no attempt to really flush those guys out, that is a very bullish sign. So again, a lot of bullish signs for equities, bearish signs across the board for the safety trade. So I haven't added anything right now. I'm holding on to my position, seeing how this stuff all works out. Remember, I'm kind of playing the bonds a little bit higher here to kind of stay stuck in that pattern where I think the Fed was preaching where we were going to go. So I'm going to hold on to my positions there. But check out today. It is on the long iron condor. May not be one of my favorite strategies that I talk about in the webinars or in the daily market commentaries, but in this webinar, I'm going to be talking about the right situation to put this on to take advantage of low implied volatility in that environment in and around these ideas where we have a directional assumption where we don't know if it's going to tank or blast off, so we can get ahead of that with low volatility in some of these underlyings. High volatility across the board, but we're seeing that volatility come out in some of those. There's still a lot of opportunity out there with low volatility that we can take advantage of this type of strategy. So check it out. I'll show you how to set that up and implement it in that webinar. So go to ProTraderStrategies.com and sign up for it. Hope to see you there. If you can't take that, take it easy.